Canada's Consumer Price Index, which is how we measure inflation, ticked up to 1.9% in January. The first full month snapshot for 2025, and it includes the federal tax holiday, which ran from mid-December until mid-February. Overall, it had a dampening effect on inflation. January marks the sixth month in a row of inflation running at or below the Bank of Canada's 2% target.
Without the HST holiday, inflation would have been running at 2.7%. So higher than what we've seen in recent months.
January prices for toys and games plunged nearly 7%, restaurant prices down more than 5%, and we paid 3.6% less for alcohol. And for the first time since 2017, food inflation wasn't a huge factor. Overall food prices actually fell, but it wasn't quite enough to offset higher energy prices. We paid more at the pumps and for natural gas, new vehicles, and household goods.
It's a lot of mixed signals for the Bank of Canada, although we do expect them to hold rates at their next meeting.
Tariff uncertainty still looms large. A U.S. tariff is effectively a tax on the American importer of a Canadian good and U.S. consumers. But retaliatory tariffs stoke inflation in Canada. And if it comes to that,
the bank will probably, in a tariff situation, want to get down to a neutral rate, which we think is around 2%, as quickly as possible. But of course, they're trying to weigh what President Trump is saying, week to week, day to day, hour to hour. So it's very difficult for the bank to maneuver.
The central bank has a lot of cross currents to consider ahead of its next interest rate decision on March 12th. Anne Gaviola, Global News, Toronto.